Welcome back, everyone, to Living Your Greatness. My name is Ben Mummy, and today I am super stoked to welcome back Christopher Aaron to the show. Chris, so good to see you here today, brother.
Dan, thank you so much for having me.
Chris, before we get going, just want to know, how are you doing today?
I'm doing well today. Overall, when I think about my life, big picture, uh, doing quite well. When I think about where I was 10 years ago, um, financial wise, I'm in a much better position now. I've been publishing here for 10 years. I've been in the precious metals markets for about 20 years. Uh, I started publishing when gold was $1,000 per ounce because I thought it was going to bottom plus or minus that figure. It had come down from about 2000 in 2011 to 1000 in 2015. I said, this is probably a good time to start publishing my research and analysis. So, in the last 10 years, gold has gone from 1,000 to 5,000, and silver has gone from 15 to 85.
Mm.
Financially, I'm very grateful to be in the position where I am now. Um, you know, Health wise, I'll be honest, I'm suffering from allergies right now, some seasonal allergies that I've not experienced before this time of the year. Maybe it's been a warm winter, or maybe there's something in the atmosphere going on that I'm not aware about. But at the present moment, I'm feeling a lot of scratchiness in my throat, and I've been sneezing quite a bit. So listeners will have to excuse me if that interrupts at all. Uh, but overall, I am thankful for where I am, and uh, th- we are in a moment right now with the precious metals, especially, which is what I focus on: precious metals, commodities, currency markets, especially. But everything is related, so I follow most major markets. Uh, but we're at a point right now where, like, the last 12 to 18 months have been really dramatic. Even just the last 6 months. I mean, the last 6 months, we've seen silver go from $30 to 120, back down to 85, where it is today. We've seen gold. We were talking earlier, Ben. We've seen gold go from 2,000 to nearly 5,000 since we last spoke. It was a couple years ago. Um, but when I look at this and then look at where we are right now, um, I am grateful, but I also am very aware that markets do not move in a straight line, higher, lower, sideways forever. We've had very powerful moves recently in these markets based on that sort of near parabolic short-term move in silver, where it went from 50 to 120 in like 6 weeks, um, and then came back down to 70. It seems to me like the moment that we're in is where the markets are going to need to consolidate. The markets are going to need to move sideways for a little while. Could be a few months, could be a few quarters. And that would actually be the most healthy thing for the markets over the long run. You don't want a market that is going vertically higher week after week, where every day you wake up and you just think to yourself, how much higher is silver today? How much higher is gold today? That type of psychology tends to coincide with tops. Um, the analogy that I draw has to do with my connection to the markets as being a function of nature, to really boil it down. The markets are a function of nature because the markets are a function of human nature, and humans are part of the natural world. The natural world around us moves in cycles. It moves in seasons. It moves in waves, whether we're talking about the seasons of weather and climate, whether we're talking about the patterns that plants or animals move in, the stars, the galaxies, the hurricanes. Everything moves in patterns, and the markets move in patterns as well. And what I will say is, the present moment that we are in right now, where it looks to me like these markets, after these really dramatic moves, that these markets need to consolidate for a little while, that is also a function of nature, a function of human nature. we tend to exert ourselves. We go outward. We have these strong moves, and then we need to come inward. Then we need to consolidate. Then we need to what? We need to rest for a while. We need to gather our energy for a while before we can make the next climb. And so I think the markets are going to be in a consolidative state here for a couple months, could be a couple quarters. And I'm saying that not only from the standpoint of the markets, but I'm using that to reflect inward, because we as human beings making up the markets need a chance to consolidate as well. And what I say to investors is that when we're in these moments where maybe silver is not going higher every single day or every single week, even though today as we're speaking, silver was sharply higher, higher by $5 per ounce. What I say to investors is welcome the periods of consolidation, and then don't get bored. Don't say, but it should be moving higher every single day. Use the consolidative periods to take stock inward of where you are, both with your portfolio, but also where you are with your wider life. What are your goals for the next 12 to 24 months? What do you want to accomplish with your portfolio, with your assets, with your resources? Because the time to be planning that is in the rest periods. The time to be planning is in the consolidation periods. When things are going like this, that's when everything's going crazy and it's exciting. That's not the time to be making your plans. That's the time to be then taking chips off the table. So how am I feeling today? This is a long-winded, broad answer, but I'm feeling grateful, and I'm also not only grateful for where we are, what we've accomplished in the markets over the last 10 years, but I'm grateful that we're having this consolidation right now and this period to basically take stock of where we are and reflect and prepare for the next wave.
Something I want to stay on is I think you brought up a great point. It's been very volatile in terms of the last couple of months, gold and silver, right? We've seen such a rise so much that it's almost like, hey, keep going up, right? And people lose track of why are they invested in what they're investing? How do markets work? How do cycles work? So I think it's really good that you took people one step back and just kind of regrounded what we should be thinking about from an investor standpoint. In this state right now, we have more time on our hands to make more selective moves, right? Because when things are going fast, it's really easy to get caught in the motions. So, could you dive deeper more in terms of how you are maybe guiding right now your clients in terms of the plan?
Yeah, and would it be okay if I share a chart here
Yeah.
with the listeners so we can have a perspective on the most important thing here, um, that I am seeing? So what I want to do here is just walk people through the the longest term perspective for silver. We can talk about gold as well, and we will. But silver has been the most dramatic. Silver has been the one precious slash industrial commodity that up until just 3 months ago had not broken above its 1980 peak, its former all-time high. Whereas when we look at gold, copper, platinum, palladium, oil, all those, for example, um, all those markets had been well above their 1980 peaks here for the last couple of decades. Silver is now just having its move. Silver is kind of the most exciting right now. And so I just want to set the stage with to answer that question, what am I doing right now, or what am I looking at right now on the investment landscape? I just want to set the stage with where we are for silver, because I do believe that over the next, call it 2 to 5 years, a single handful of years is what we're talking about. Not another several decades, but single handful of years. I do think the most dramatic move that we're going to continue to have is in the silver market. Gold is going to do well. Copper is going to do well. Oil should do well additionally. But I think the most dramatic move is still going to happen in silver. What we're looking at here on this chart, Ben, is a 250 year uh, chart of silver going back to before the U.S. Civil War. This is the early 1800s back here, and it's a little bit difficult. Just to let you know, back here, before the 1960s, you can see these what it looks like these dots over here on the chart. That's because we only have monthly closing data going all the way back here. If I were to switch this over to a line chart, there you can see the price data going back into the 18 and the 1900s. Why I like to switch back to the candlestick chart is because you can notice on the line data, it shows this peak here in 1980 is $35 per ounce. It was not $35 per ounce. It's because when you're using a monthly close, that's how it'll show on the line chart. But we're going to go to the candlestick chart, and so now you can see the monthly peak here from 1980 was $50 per ounce. So it's just to show you about 250 years of data on the silver price. And I just want to zoom in a little bit here to remind listeners of the big picture, let's call it, in the freely traded era, post Bretton Woods, post 1971, when Nixon removed gold from the dollar standard, or the dollar was removed from the gold standard, however you want to say it. And the sort of first dramatic wave that we had in the 1970s when silver went from $1 to $50, and then it consolidated for 25 years, got back up to the $50 level in 2011. I participated in the markets extensively back here from 2008 to 2011. I talked about this at my talk in Vancouver at the VRIC a couple months ago, that I first started investing in the precious metals right here in 2008. If you notice where my mouse where is right now, silver was like $16-17 per ounce, and I was listening to a lot of the precious metals analysts at the time saying the dollar was going to keep going lower, fiat currencies were going to keep going lower, there are problems in the housing market. And so I listened to them. And to zoom it in here, what happened after the global financial crisis, I got into silver at 16, 17, it crashed down to 8, right? 6 months later. And so I was down like 50 or 60% on my silver. And this is why I started doing what I do now, which is to focus on price. I focus on the price of the asset in question because as investors, I recognize, what do we ultimately care about? You might say that you care about sovereignty. You might say that you care about having an asset class which is outside the system. I care about those things as well. But if that sovereignty or the asset class which was outside the system was just going to fall in price every year for the next 25 years, then I would not be interested in that asset class. If it was going to be moving lower for decades, I would not be interested. I'm interested in the markets that I am interested in, the markets that I'm covering, the precious metals, because, Ben, we are literally, we have just seen a 45-year breakout for the silver price 3 months ago. We have just seen this breakout, and I'm showing it to you right here. It's this break of the 1980 peak, the 2011 peak, and the current level that was hit in November of 25 and that has now broken out. I am interested in silver and precious metals because we have, if you were to ask me going back to 2015, when I first started publishing iGold Advisor, the service that I now run, if you were to ask me what would be the most bullish set of signals that you could possibly imagine back then, 10 years ago, like if the question was, what are the signals in your wildest fantasy that you would hope to see from a bullish precious metal standpoint? We are seeing it right now. We are seeing the most bullish signals that I could possibly fathom, whether we're talking about gold itself, whether we're talking about the relationship between gold and the stock market, whether we're talking about the breakdown in the US bond market, whether we're talking about the silver price itself, whether we're talking about the gold and silver miners, we are seeing the most bullish signals that I could possibly fathom. And remember, I am a price analyst. If I thought we were about to experience another 2008 where the silver price loses 60% of its value, I learned my lessons back then. You don't ignore signals like that. You take protective action if there are going to be signals like that. We are not seeing signals like that. We are seeing the opposite. We are seeing the most bullish signals that we could possibly ask for in the precious metals markets. And that is a 45-year, you're seeing it right here, this giant 45-year consolidation, which has just broken higher 3 months ago. So the consolidation or the rest that we are currently in. Let's change this over to a daily chart, right? And zoom it in right now. And the black double line is our break above the former all-time high. This was the sort of above, below, above retest. It was a bit of a process back in November and December to break above 50. The dramatic move that we saw up to 120 and then short-term collapse back down to 64. And now here we find ourselves back in the mid 80s. This sort of dramatic short-term price action needs to be remembered for what it is on the bigger picture perspective. And that is that silver is in simply the first consolidation following a multi-generational breakout. And depending on the age of the listener right now, if you're fairly young, if you're in your 20s or early 30s, you may experience two bull market cycles like we are experiencing right now. For example, this one, and then 30 or 40 years from now, there may be another cycle like the one that we are presently living through after a couple decades where the markets will rotate into other asset classes. But for most investors listening to this right now, for the majority of investors listening to this right now, this move that we are currently living through in silver, right? I started publishing back here in 2015. I got pretty close to the exact bottom. There were a couple, false breakdowns. Whether we're talking about the start of the move back here in 2015, whether we're measuring it from back here in 2022 and in the 20s, or the breakout above 50 that we just saw 3 months ago. For most investors, this is going to be the most dramatic bull market in the precious metals sectors that they ever live through. And if they capture this correctly, this is going to be the only move in all of the markets that they ever have to capture. Because the returns that are going to come now that silver has broken out of a 45-year consolidation, we can look at, for example, the last time that there was a multi-generational consolidation, talk about this move from this is the post-Civil War in the United States move, when silver moved from $1 up to $3 in the years after the U.S. Civil War, so 1860s, and then it consolidated until what, the 1970s. So we could call this a 90-year consolidation. And following a 90-year consolidation in the early 70s, silver moved from what, 3 to 50. It had, call it a 15x kind of move. So the consolidation that we're living through now is not a 90-year consolidation, but it's a 45-year consolidation. If a 90-year consolidation resulted in a 15x move higher in silver, does a 45-year consolidation result in, let's say, from the breakout point here, from 50, does it result in a 7 or an 8 times move higher? I mean, that would fit in with the statistical average of what we just looked at as far as a 90-year consolidation being a 15x move. The cycles are not going to repeat exactly. But what I am trying to emphasize here is that for most investors listening today, this breakout in silver that has just happened 3 months ago is going to be the only breakout and the only bull market that they ever have to capture in their lives, because the returns on this are going to be so dramatic over the next 5, 7, 10 years, that this is all they are going to have to concern themselves with. So when we just remember again the short run, let me switch over to that daily view and zoom in my perspective here one more time. The daily view, right, was quite dramatic. I mean, 50 up to 120, back to 65, 85. I mean, this is a lot of volatility, but they have to remember that this volatility is simply the first consolidation following a multi-generational breakout. A multi-generational breakout is not going to end with 3 months. The breakout happened in November. We're recording late February. The 45-year breakout is not going to end with 3 months of one little spike higher and that's it. This is going to carry on for several years now, and there are going to be levels that are hit that are a multiple of the former peak, a multiple of the former all-time highs. And if that's happening for silver, you better believe that's going to happen for gold. You better believe that's going to happen for platinum and palladium and oil and most of the uh, commodities that we use today as human beings. But I think the move in silver is going to be the most dramatic. And so I've just seen over the last couple weeks sentiment shift from very positive at 120 to, oh my goodness, that was it. Like it's over here. Guys, it's not over after 45 years of consolidation. This is not over after just 3 months. So that is what I'm trying to emphasize for investors right now, is to really uh, take advantage of this consolidation here, because this is the first consolidation. This is like when gold broke above 850, and it did that in 2008. And you were looking at that first consolidation for gold at around 1,000, 1,100. If you were telling me that that's it for gold after breaking out, I mean, look, you've missed a 5x after that move. That is where silver is right now.
So, Chris, let's stay on silver because 45 years is a long time, a lot of patience. So, we're now here, which is exciting. Now, one thing before I ask the next question, if we look back just a couple months ago, you showed where it got violent, right? And really emotional, right? Traders that were coming in, more people that were starting to talk about it. But the question I want to ask you, because I know you're so good with prices, is if we're looking right now, this quarter, then if we're looking midterm, so let's say the next year, and then let's say we look long term, the next 2 to 5 years, because that was the range that you were talking about. Could you just draw out, both in a conservative way and then a bullish way, of what these prices for silver that we probably can't even imagine because we haven't seen it before, what it could look like, different probabilities?
Yeah, absolutely. Um, Short run. Let's go back to our charts here and just confirm with me that you can see the silver chart again.
We're good.
Um, Short run. So let me switch over to the daily view. And of course, when we're looking at the short run, you never forget where we are, which is 3 months after a 45-year breakout. In my premium subscription service, I am reminding my investors of this every single week. I won't let a week go by where I don't remind them of what has just happened literally 3 months ago, because it's so easy to just focus on the very short run and be like, oh my goodness, this is too dramatic. Get me out. This is it. This is the end. Anyway, I said it. Over the short run, I have not that much concern. And I have not that much concern because uh, this level of volatility needs to iron itself out. Uh, there was a lot of hot money that came in, mostly in the futures market over the last, I mean, call it just from late November until late January. I mean, that's only 2 months. Um, a move like this, you clearly start attracting a lot of hot money in the paper markets. Um, over the very short run, um, I actually don't care that much, Ben, what
Why?
happens to this. Um, because the long-term signal is just so predominant. It's so powerful. It's so front and center. It needs to be honored. Um, when we're talking about what this is, I want to add some clarity. This is not just a consolidation. If this consolidation were to, let's say, drift lower even over the next couple months, I mean, right now, I mean, today was a very good day from 78. I mean, closing at the high at just below 85. Very good day. But let's just talk most conservative short-term scenario. If this consolidation were to, let's say, grind downward like this, see how I'm drawing this with my mouse here. Just kind of grind maybe more like this, more like overlapping waves. Precious metals, seasonality speaking, often like to make a low in May or June and then kind of pick up late summer through the fall in the fourth quarter. If that were to happen, if we just see more overlapping grinding, let's say back into, I mean, we've already hit 64 a couple of weeks ago. If that low were to be retested or maybe even make a new nominal low into the low 60s, maybe even the upper 50s, if that were to happen, what that would constitute from the bigger picture perspective is a term that we use in price analysis, technical analysis, called a retest. And it would be a retest of the 45-year breakout. What is a retest? A retest is when you have a new dynamic that is formed in the market. You have a level that was previously never exceeded that finally gets exceeded. There are finally enough buyers after 45 years for whatever reason, and it's all the reasons. It's the fundamental reasons. It's the industrial demand. It's the solar power demand. It's the solid state battery demand. It's the monetary demand due to the debasement of fiat currencies. It's demand from the east. It's all of those reasons combined. So we remember it's all of those reasons. And for all of those reasons, the market finally said, hey, we're in a new paradigm. We're in a new dynamic here. And you have hot money that begins to chase that. Futures, options, speculation, commodities for contracts for delivery. All of that hot money starts to come in. And then some of that money starts to take its profits here into the peak. A retest is when you have profit takers over the very short run that say, hey, I'm happy with that. I doubled my money in a few weeks. I'm going to sell. And the market starts what? It starts drifting back. It starts drifting back. It acts a little bit listless here. It drifts back toward the breakout point. And the market, the short-term traders are basically challenging whoever those long-term fundamental buyers here, those true end users or true investors, the market is basically challenging those long-term buyers to show up again and say, hey, you did it once, prove it to me a second time. Prove it to me that that wasn't a one-off event. Prove it to me that you really are going to buy here when we come back into the low 60s or the 50s or even the upper 40s, right? So when I say that I don't care about the short run, uh, I'm not trading this over the short run. Just first of all, if I was trading futures or options, I would care about the short run moves. I'm not right now. I have a lot of long-term positions in silver and silver miners. But I don't, the other reason why I don't care is because when we take this price action, And whether or not it needs to just grind again for another few more months, come down another 5, 10, $15, whether or not this was the low right here just 2 weeks ago at 64, we are going to be looking back at this um, a year from now, 2 years from now, 5 years from now, 10 years from now, when silver is in the mid triple digits is my best expectation. And we are going to be saying, wow, remember that first pause. Remember that retest of the 45-year breakout. We're going to be looking back and we're going to be saying, remember that last opportunity that silver gave us. That is what markets often do. They give a final pullback, a final retest. It is the short term momentum traders taking their profits, exiting the market, and challenging the long-term structural buyers that came in that caused this market to break out after 45 years, challenging them to show up again for the second time. And you take the message of the market for what it is. The message for the market is that those buyers were there. There are new structural buyers that have entered the silver market over the course of, 2025, 2024, recent years that caused a new paradigm to emerge in this market. And you take the breakout for being valid in price analysis, you take the breakout as valid unless proven otherwise. The market would have to show us that this was some sort of strange one-off event. We never assume that. We assume that the breakout is for real. And so that's why I said, if we come back here into this zone, that is simply going to represent a retest of the 45-year breakout. And this will basically be a final buying opportunity for any investors who missed the last year or 18 months to load up before we move above this peak. So does that make sense why I'm not so worried about the exact twists and turns of the short run here?
It actually makes a lot of sense because kind of like you explained before, it's just stabilizing its price, right? It's almost like a new reality of silver's not going back to $20 that we had seen for years.
Exactly right. And markets do this from time to time. Markets do in fact enter new paradigms, new realities. Um, it's rare. It's not going to happen every month, even every year, even every decade. But sometimes after enough decades and enough consolidation and enough, you have to remember what is actually happening in here in these multi-decade consolidations. You have all this metal being transferred from weak hands to strong hands. So many years of buying, both by investors and by industrial users, and so much of that industrial silver basically leaving the supply side of the equation forever. Because so much of the industrial silver, I mean, you only get silver recycling coming in at about 5%, 5 to 10%. I mean, a really good year would be 10% of supply. I don't think that's happened in recent years. Maybe 5% of silver will get recycled. The rest of it ends up in landfills. It ends up in electronics that get thrown away after a few years. And that silver permanently leaves the supply. And then much of the investment demand for silver, for people who are going to be stacking or holding silver for many years, a lot of that silver permanently leaves the supply side of the equation. And so after all these years of consolidating, um, the available supply of silver is just so notably lower than it was over previous decades. And that's why when you start to get a few new buyers coming in here for whatever reason, for all the reasons, they cause this new paradigm to happen. Um, then to just pivot here and talk about my long-term expectations. We have a really fantastic set of data points that I'm going to argue line up not coincidentally but actually line up in a really meaningful kind of way. Um, if we were to, uh, okay, let's do it visually first. So remember, we have this data point right up here. It looks like we don't, but there it is. You can see it when I switch over to the line chart, right? The post U.S. Civil War peak, and then I have to switch back to the bar chart so you can see it connecting right there in 1980. So these two data points connect. We can see all the lows rising. We can see where the buyers were stepping in every several years, every several decades, right? Along this lower magenta band. And then we look at how there's basically a parallel. Remember, markets often like to move in repeating patterns. Patterns exist in nature. We move in patterns as human beings. The markets move in patterns. You just look at the upper boundary, the parallel of this, call it multi-century rising support band here on the lower side. The parallel that has two valid points. We talked about that 1860s and 1980s. And you just keep projecting that. We're looking at a log scale right now. You just keep projecting that out in the future and just follow my mouse here. And I don't know, let's talk about 2030. Let's move this out to 2030 and look at where the price level comes in right up here. Okay. Call it February of 2030. What is that, 4 years from now? Notice that the price comes in 365 or so, $365 per ounce on silver. If we just take the upper parallel boundary there. Um, Now, you might say to yourself, well, that's just coincidental. I mean, who knows, if that's going to be hit precisely. And yes, ultimately, who knows? I mean, one of the things that I always say as a price analyst is that I never have a crystal ball. We're always making uh, uh, educated guesses, educated assessments, educated projections based on all of the visible data. But why I like to focus on price is because price contains all of the buying and selling in one single data point that comes together. If you're just cherry picking one or two or 100 different fundamentals, like you're looking at battery demand, you're looking at solar demand, you're looking at photography demand, you're looking at mine supply, fill in the blank. If you're just taking a number of fundamentals, you have no way of knowing what percentage of the total fundamentals uh, that represents. And the truth is that it actually represents, if you're taking one or two fundamentals and saying, therefore, a market should move to a certain price, functionally speaking, you're actually taking 0% of the fundamentals. Why? Because there are infinite fundamentals impacting a given market, such as silver. Because what is a fundamental? We actually have to take a major step back here and ask ourselves what a fundamental is. People often like to say, "Oh no, I don't go on price. I'm a fundamental analyst." What is a fundamental? A fundamental is a decision. It is a decision that a buyer or a seller makes to either buy or sell. It is either demand or supply. But I'm going to extend those categories out. It's not just buyers or sellers. It's potential buyers or sellers. It's someone who does not buy or does not sell. Because if someone, let's say, does not buy silver and instead chooses to hold fiat currency, they are taking that demand away from silver. They are actually exerting overall downward price action by not buying, by not supporting the market, because supply is constantly coming into the market. So unless new buyers come to scoop up that demand, the price will trend downward over time. And so investors might say, well, because of solid state demand, because of solar demand, because of industrial demand, silver has to do A, B, or C. What I'm saying is that if you're focusing on one, two, three, or all of the fundamentals that you know about, that actually represents 0% of the total fundamentals, because every man, woman, and child on planet Earth impacts the silver price, either directly or indirectly, if they choose not to buy or not to sell and instead hold fiat currency. There are actually infinite fundamentals, even amongst individuals like myself or yourself, Ben, or the listeners. who are choosing to focus on the precious metals markets, how many fundamentals does each individual have within them?
Mm,
How many decisions is each individual making? How many thoughts does each individual have that impact their decision about whether to buy, not sell, wait, all of the above? Each individual has near infinite thoughts, near infinite data points going into their decision process. And so, again, to come to this point, there are infinite fundamentals that impact any market: silver, gold, stock market. There are infinite fundamentals. And if we just cherry pick one, two, or three, what is it in math? I mean, you go back to basic math. Any number divided by infinity is equal to zero, zero. So I don't shy away from saying this because this is what I believe. And I learned my lesson in this again, remember in the crash of 2008 when silver fell by 60% in 5 months. And all those fundamental analysts were out there saying silver is going to go higher because fiat currency is going to zero eventually. They were totally blindsided in the crash of 2008. And not only did silver fall by more than the stock market in the crash of 2008, but the silver mining companies, I'm not joking, they fell by 90%, 90% in 6 months in the crash of 2008. And I remember this because it was imprinted in my head. It was the first major time that I started investing. I was in my 20s. I was listening to a lot of the fundamental analysts. They were totally wrong at that time. And I said to myself, I'm never repeating that process. Instead, I'm going to focus on what ultimately matters, the price, but not only what ultimately matters, what ultimately contains all of the fundamentals together. Because all of the decisions, all of the buy and sell, the commercial hedging, the mine supply, the investment demand, the industrial demand, even the manipulation, all of those fundamentals must impact the price. And so if we study the price, we are studying all of the fundamentals together. But there is no way to just parse out one or two fundamentals and say, therefore, this market is going to do X, Y, or Z. So we study the price. We come back to the price. We talked about this upper band of this trend going back for 250 years and how that happens to come in here at, what did I say? 350, 365 when we get out to 2030. Um, Fascinatingly, if we were to do a statistical analysis on what happened to gold, copper, platinum, palladium, and oil, those five precious and industrial commodities, of which silver is both, if we were to do the analysis on what happened to all of those after they broke out from their 1980 peaks, the average of those was a tripling above the 1980 peak in 2 years. So that would imply $150 silver. Now, hold on, wait one more minute. The average of those five commodities, copper, gold, platinum, palladium, and oil, those commodities were consolidating for an average of 25 years before they broke out and achieved a triple. If 25 years resulted in a triple, wouldn't it make sense that a longer consolidation, a longer gathering of energy by the silver market, nearly twice as long, call it a doubling, nearly twice as long as the other commodities, might result in something approaching a doubling of the performance of those other commodities? I mean, it had been consolidating for nearly twice as long. It all that metal has been transferred for nearly twice as long to strong hands. Wouldn't it make sense that the market would have that much more built up energy once it finally breaks out? And so if we were to, let's say, we're going to get somewhere approaching a doubling of the previous commodity performance, which I said was a 3x in 2 years. If we get close to a doubling of that performance for silver, then that calculates out to approaching $300 per ounce. Simply based on the statistical analysis of all the other commodities when they broke their 1980 peaks, and then the amount of time that they were consolidating before that. So I just find it fascinating that whether we're studying the visible pattern, the trend, or whether we are studying the statistics of the amount of time in the breakout, we are starting to get a confluence of data up here, let's say in the region around $300 per ounce for silver. And so, as someone who always says, I mean, ultimately, I don't have the answer, I'm making educated projections based on visible data. I'm zeroing in on somewhere in the 250 to $350 range for silver as a, let's call it, end of this cycle that we're in right now.
Would you say that's your conservative or that would be your highest prediction?
That's going to be my most reasoned and calculated uh, estimate. Um, if we were the only data point that would start to show me that that's being too conservative would be if, when we are zooming in here a few years from now, let's talk about the end of this decade or the early 2030s. If, when we're zooming in here, uh, silver were to, let's say, pause at this upper trend here, which is going to approach 350 a couple years from now. Let's say pause and do something like it did. Let me just remind you the price action when it broke above 50 a couple months ago. If it were to do something like this, sort of like above 50, below 50, above, retest again, spend some months or even some years in the longer term perspective, false break, second attempt, holding. If it were to do something like that, once we get a few years from now, and we're talking about challenging that upper line, that nearly 200 year trend, and it were to do something like that and sort of consolidate on the upper side of that line for several months, I would then take a major step back and say, hey, even maybe those figures are being too conservative. And I would use a whole other host of uh, signals at that point to try to guide my next set of targets. But what I like to do is to take the market in chunks. Um, a move from 80 to 300, if one is properly exposed to uh, silver, silver mining companies, and related investments, is going to be a life changing move for most investors as it is. So I don't really see the need to uh, project too much beyond that. We have a life changing setup on our hands here over the course of the next single handful of years. Call it 2 to 5 years is when I expect this move to play out.
I really appreciate you taking the time to explain that because I find it helps people then get away from the day to day or the week to week. It makes them really look long term, especially with silver. Something that I do want to ask you though, if we look at gold the same way that we just did with silver, what would that mean? Because we always hear a lot, when we study history, the gold to silver ratio, right? And just showing the potential if silver is maybe going $300 and plus, based off what you just explained. And if Michael Oliver is predicting that too, he's saying even $500 silver. Christopher Vermeulen, another really good respected name, has said 400 plus silver. So knowing that respected voices like yourself and these other names are saying that, I'm curious to know what it would look like for gold long term.
Yeah, I mean, um, all we need to do that. I mean, what's interesting is that, um, and I don't derive my analysis from comparing it to anyone else's. I really strongly actually feel, and this is not to be arrogant, this is to try to be as accurate as possible. Every once in a while, someone will show me a chart that's prepared by another analyst, and I'll say, "Wow, I really missed that. Like, I didn't catch that data point." And so, um, it's not that I will be 100% closed to looking at anyone else's analysis, but I have found in my career that if I, let's say, 85%
Mm,
stay focused on my charts, that it helps me to not get distracted because it would be easy, I mean, to fall into dozens of different forms of analysis that end up competing in one's mind. And so anyway, this is just to say that I had not seen those projections by either Christopher Mullen or Michael Oliver. I had not seen those, but I find it interesting that we are arriving at similar, I mean, within the ballpark, similar figures. I mean, none of us are saying silver is going back to 20. None of us are saying it's staying at 50 for the next 45 years. You know what I mean?
mhm,
We're all looking at sort of multiples of that level. And I would contrast that to the mainstream investor consensus. If you were to listen to people on, I mean, there was a major analyst from a bank on CNBC a couple months ago, saying he was shorting silver at 70 from their
mm,
trading desk, and they got blown out of the water like 2 weeks later. They got, it was all over X, Twitter. I mean, I think mainstream analysts are not looking at this um, properly, and the reason is that mainstream analysts don't do enough historical. Most trading desks for banks or commodity desks, they might look back like 5 or 10 years, maybe 20 years. Most of them don't study these multi-century cycles. I
mm,
think it takes someone. And I'm not saying it's only myself, but it takes you know individuals like us who, I mean, I've been I've been focusing on precious metals charts for nearly 20 years. Uh, I sometimes look minute by minute, literally as the ticks are going by for hours. I mean, hours upon hours. And you start to do that enough, and you actually do learn things. You actually do notice things about the behavior of these markets. Um, so yes, it's interesting that we're having these similar targets. As far as your question about what that would mean for gold, I have some other ways that I can analyze gold, but doing it that way, as far as the gold to silver ratio, is I think a good starting point. It's like a good baseline to talk about. Um, let's take the figure. Let's call a conservative, but still fairly aggressive long term figure. Let's call it $250 per ounce for silver. Let's just take that level, so we don't even get up to that upper band,
mm,
but maybe it fits in close with the statistical models of the other commodities. I have a target. I have a short-term target for the gold to silver ratio of 38. It's currently in the mid to upper 40s. I have a short-term target at 38. I could get into why that is another time, but just take what I say to be, this is my takeaway at this moment. I have a short-term target of 38. If silver hits 250 and we just say times 38, we're looking at 9,500 gold. This fits in with actually another form of analysis that I'm doing. It's the stock market to gold ratio. We could look at
mm,
that later. But when I look at the comparison between the stock market and gold, gold has just broken out versus the stock market. And when I look at where the next major support or resistance is for that ratio, it actually lines up with about 9,000 per ounce gold. So it's interesting to me that over the intermediate term, next 1, 2, 3 years, both the gold to silver ratio and gold versus the stock market seem to line up in that range, about 9,000. Right now we're at about 5,000. So that implies about another double for the price of gold. Um, I mean, some people would say that's impossible. Gold's not going to double from here. I mean, Ben, gold just doubled over the last 2 years. The last
mm.
time we did a podcast. Why can't it double again over the next 2, 3 years? You know what I'm talking about? Um, So mid 9,000s kind of fits with that intermediate term. However, if we were to, let's take the level where both gold and silver bottomed, excuse me, the gold to silver ratio bottomed in the previous bull markets. Let's talk about the bull market in the 1970s, which ended with gold at 850, silver at 50. We looked at that. We looked how in the 1970s, silver moved from $3 per ounce to 50 in 9 years, right? Like a 15x, close to a 15x. We looked at that a little while ago. If we were to look at what level the gold to silver ratio hit at that peak, 1980, it was 17. 17 ounces of silver to buy 1 ounce of gold. In other words, 850 gold divided by $50 silver gives us 17. 17. So that was, and we know that was a long-term peak for the precious metals. If we were to apply that number, 17, as let's say that represents a multi-decade peak. So I'm not talking about the interim peak, which is probably coming in 2 to 3 years, but let's say mid to late 2030s, like the real end of this, the real final wave of this precious metals bull market. I mean, if we were to stick with that sort of relatively conservative $250 per ounce on silver, and just multiply that by 17, excuse me, where are we here? 250, what did we say? What do we have? 9,500 divided by 38. Yes, gave us 250. That is that target. So now, if we were to do, let's say, 9,500 divided by 17, what does that get us? $550 for silver, right?
Hmm.
Into this next wave. If that gold to silver ratio is going to compress to the level that it hit at the peak in the previous bull markets. Then we start getting into some of those levels, you know, approaching $10,000 gold, approaching $500 silver that maybe Michael Oliver was talking about, right? The other really interesting thing that I will say here, if we want to talk about gold to silver ratio, not just from the previous bull market, but if we want to look at that long term, historically speaking, there are records of what Roman soldiers were paid in ancient Rome, going back to the time of Christ, before the time of Christ. There are records as to how much Roman soldiers were paid in silver for a monthly wage relative to how much, let's say, a general or someone higher ranking would be paid in gold. And that level was very close to 15 to 1. If we look at the 2,000-year biblical type of records, very close to 15 to 1 going back for thousands of years. So isn't it interesting that that 15 is very close to 17 from the 1980s peak? I would say there's a pretty good chance that we get back to those almost like millennial type of levels in the relationship between gold and silver when this market makes a final peak. But again, for that, I don't even think we're talking about the next handful of years. I think we're talking about more like mid to late 2030s for that final wave.
All right. Well, I appreciate that, Chris. It's so insanity, right? Like when we study history, we learn a lot about these ratios and we realize that the probability is actually really realistic. But sometimes when we've been so far away, we almost can't remember, which is why we actually have to look at history, study it, understand, and it can really help the everyday person that's listening right now actually see it more clearly. Something that I want to shift from here, you've done very well in the last 10 years, which is great. But most importantly, you've done the biggest thing. You've invested in yourself, your education. You really learned about your personal sovereignty. But the thing that I've always admired about you is when you invest in yourself, not just financially, but in terms of mindset, no one can steal that knowledge from you. You know, once you have it, you can't get taxed, you can't get it stolen. You have it, right? And I'm curious to know why you choose to continue to educate others to become more financially intelligent, because at the end of the day, you're good for you right now. So there must be a deeper why of why you're trying to help humanity.
I appreciate that question. I mean, that's a great question. It's a deep question, but I like it because it's ultimately what motivates me. Um, and I say ultimately because it's very easy in the day to day of business and the markets to just get fixated on numbers and charts and statements, that sort of thing. Um, but ultimately, what motivates me is the idea that humankind uh, is actually in a period of time right now where we are growing or evolving, however you want to see it, growing, developing as a species uh, by leaps and bounds, by in ways that we have not had the potential to do, let's say, in previous generations. Um, and I say these things, it's easy to get caught in like a doom trap about the state
Mhm.
of the world. Uh, Especially if you spend too much time scrolling on the social media or watching certain videos. And especially I think this can apply to precious metals investors. And I'm not saying it's your fault, but there is a certain mindset out there that basically says like the world is doomed, and so we need to own precious metals. I own precious metals and I'm investing in precious metals, but I don't think the world's.
Mm.
I think we're going to go through a rough patch. But if you look at the major wealth producing moments in precious metals over history, you look at the 1970s, the world didn't end. I mean, gold went up over 2,000% in 10 years. The world didn't end. It wasn't World War III. It wasn't Armageddon. Silver went up, 15x in a few years. A lot of the mining stocks went up 5,000% in the final wave of the bull market. You even look at the previous, major revaluation in gold and precious metals, the Great Depression. I mean, was it bad? Was it terrible for a lot of people? Yeah, but it wasn't Armageddon. It wasn't the end of the world. I wouldn't be spending my time researching mining companies, and thinking about places that I want to live and things that I want to do if I thought this cycle was going to end in some sort of Mad Max Armageddon type scenario. I mean, do I keep some physical precious metals, on my hand, with me? I mean, sure, I have my emergency stash, I have my token metals, and somewhere in this house I have more, get me by for a year or two, but I don't have nearly all my. And I'm not saying that it's bad if you do either, because I'll just give you an example. I mean, my father is someone who uh, brought me up really well in my life. I had a lot of blessings from my father and from my parents, but my parents were not really able to save a whole lot of money throughout their lives. They kind of poured it into me and my brother and giving us a lot of great experiences and education and things like that. My father didn't really start saving money until he saved it by investing in gold and silver. And that was kind of like what allowed him to live the final years of his life, was simply the fact that he enjoyed saving in physical precious metals. So I don't have anything against that. Um, but what I am saying is that the things that the thing that motivates me the most to do this kind of thing is the human sovereignty that comes from being able to get off of the hamster wheel
Mm.
of life. Uh, Being able to get off of the I have to work 9 to 5, or I have to do certain things every single day, because if I don't, someone takes away my tokens, someone takes away my ability to uh live and do the things that I want to live. And it's not only from a self-centered standpoint that I say that. I mean, yes, am I grateful that I can pick up anywhere and live anywhere in the world right now? Yes, I am. Do I want other people to be able to do that? Do I want other people to be able to take time off from work and do things that bring them happiness and joy? Yes, absolutely. But you have to take it a step further. It's not just through the blind pursuit of fun or pleasure that I'm talking about here, because what actually happens, if you look at the broad strokes of history, the times when society as a whole has been uplifted, the times where we as a species have made huge leaps and bounds, either in science or technology or art or consciousness expansion or philosophy, it requires being able to get off of the hamster wheel, out of the rat race, to say it another way, for at least brief periods of time every so often, because you need space, you need leisure time, you need at least a base level of material resources to allow time and space for the higher faculties to start to flourish. Um, I myself, I'm sure everyone has been there. I'm sure everyone has been there who's listening to this. I have been in places, for many years, back earlier in my career, where I was living paycheck to paycheck, where I was working for the federal government in the United States. I was recently out of college, living with three roommates, uh, barely able to save, let's say, $100 at the end of the month, once after all the expenses are being paid. I've been through periods of time like that. I know what it's like, and it's not to say that those times don't have meaning and don't have value. Sometimes even when our backs are against the wall, that's where we can make the greatest leaps and strides forward, right? So there is value to that, especially in the human perspective. But what I am saying is that I have noticed for myself, uh, the times where I was able to make the greatest leaps as far as developing higher faculties or other aspects of my total being as a human here on planet Earth, are the times where I wasn't so exhausted at the end of every day, the end of every work day, just barely able to catch up on the weekend with the errands and things that I need to do. The times where I've actually had that quote unquote leisure time, or that rest time, the break time, are the times where I have been able to grow as a person. And it takes a certain level of material resources to be able to do that kind of thing. And if we kind of look at where we are right now, as where we are compared to the last, I mean, how many years do we want to go back? But I would even just say, compared to 30 years ago, 20 years ago, um, what we have the capability of doing, not only to have discussions like this, which might trigger someone's brain into thinking something new. And even 20 years ago, yes, the internet was around, but we couldn't do this. There were no live streaming types of things. There were no conversations. The bandwidth wasn't there. I
Mm.
remember back into the days of real audio, just having a dial-up modem and just being able to squeak through a little, compressed audio file to listen to. I mean, this is a whole nother level that we have the capacity. And so think about it. We are growing right now from this conversation. Maybe some of the listeners are growing right now. The sum of our consciousness is improving based on this interaction right now. This wasn't possible 20 years ago. But let's take it a step further. How about the fact that I mentioned that I'm suffering from some allergies right now. uh, you know, uh, I have my own health issues. Everyone has their own health issues. No one is perfect, right? I have on my kitchen counter over there in the other room, uh, 5 or 10 different exotic herbs and plant based medicines that I have ordered over the last couple months to try to help my health, which improves my consciousness, which improves my total capacity as a human being, which allows me to have this conversation, which allows us to share information, which allows everyone to grow. I have these things that show up at my door after I press one button, and I have an herb, or I have a plant or a berry that's picked from a mountaintop in Tibet showing up at my door that used to be reserved for royalty. You have certain herbs and plants that you can get that were literally given as gifts to kings 30 years ago, 50 years ago, 100 years ago, 1,000 years ago, that you can have show up at your door now in a little bottle for $35. What does that do to us as humans? Our capacity to think, to grow, to learn new things about the cosmos, about awareness. So, um, ultimately, I am not a doom and gloomer. I actually think that we're living through one of these cycles right now where the mainstream economy is going to be a little bit stagnant because of the amount of debt and money that's been printed that has to be dealt with. And so we're getting these revaluations, especially in precious metals right now. And I think that can happen. And so I want as many people as possible to be able to achieve financial sovereignty, not for the blind pursuit of a number on a screen or an account statement, because if you get too caught up in that, you can be dragged down to a base level of existence. And we're all prone to that. I mean, I spend most of my day staring at numbers and charts as well. But what I am saying, this is why it's important to take these rest periods here, these times away from the screen, especially when the markets are in these more consolidative states. And um, if you can get to a point in your financial career where you have enough to do the things that you want to do, I would then say that the goal that then inspires me mostly at that point is to not just try to increase a number or a statement ad infinity, but to try to then use that freedom to develop higher faculties, which can then allow us all to grow simultaneously.
I love your consciousness to yourself, that you've really taken the time to have the time wealth, better understand yourself, and share that that's such a motivating factor that you want to give that gift to other people around the world. I think that's beautiful. And I actually feel the same. I have a lot of friends where maybe in the athlete world, I was always the captain or the leader, and it never mattered for the title, right? All titles aside, I care about people. But why is Ben Mummy, talking so much aligned with you on a lot of things that you said is I want to help more people get away from the rat race. I want to help more people actually have very strong well-being and financial well-being. Having good finances in place, it's a tool. It's a tool to take care of yourself, protect yourself. I think there are some facts that some of the most divorces sometimes come from financial instability, right? So I'm totally aligned with all the things that you said. And actually, when I first met you, Chris, I've never shared this with you, and I'll share it right now online. But when I first met you, why I connected with you and had deep respect of our relationship was more the conversations we had at night, which were not even around finance. It was more on a human level, a deeper level of our values, our belief systems. And the one last question that I really want to ask you for today is if you were to step back, we're always evolving as a person. But if you want to share with the world right now so they could fully understand who you are, who is Chris Aaron?
Well, before I do that, I'll just say that I appreciate that about you and this podcast as well, Ben. I appreciate, most of the financial podcasts stay fairly narrow in this sort of one kind of channel. What's happening to gold? What's happening to silver? What's happening to mining stocks, etc. Um, I like that you brought in it, because I mean, this is how I am as a person. I think this is how you are. I think this is how most of us are as human beings. We're much more broad than one specific channel, one specific narrow
Mm,
topic. But we often get put into these, like society wants to sort of place us into a certain kind of box. Christopher Aaron, oh, he's a precious metals
mm,
analyst, right? That's what he does. Uh, you know, so I'll listen to him about that, right? But like, um, yeah, I I really appreciate that. And but I want to say one other thing too, which is like my desire for humanity to grow as much as possible, both inwardly and outwardly. Yes, some of that is that I genuinely care about the upliftment of my fellow human, all life to the extent that we can. But part of it is selfish. I'll fully admit. I mean, I want to live in the most incredible world that I possibly can. And I know that that happens by the more people possible getting lifted up and having access to resources, technology, new thoughts, growth, et cetera, et cetera. I mean, that was one of the big things that I learned to take this just for one moment onto how I arrived at some of these topics. That's one of the big things that I learned in one of the darker periods of my life through participating in the wars, through being in Iraq and Afghanistan for a year back in 2007 and 2009, for participating, for helping, the cause of those wars, which I did wanting to help security and prosperity in the world, but I ended up having my eyes opened for me. I was a bit naive at the time. And, I saw that the direction of the wars was actually resulting in less security, less prosperity, and not to mention the amount of the waste of the resources, both financial and human resources, right? And so this is how I arrived at that outlook. I started to see that there were certain forces out there that seemed to want to hold us back. They seemed to want to hold us back as a species or as a planet, right? And then there were certain forces that were working to uplift, to help drive us forward. And so there is a bit of a battle going on here. There's a little bit of a back and forth, a push and pull, right? And I'm not trying to say that I have all the answers or the ultimate answers as to why that exists. Why does good and evil exist? Why do we have these forces, working in the world? Maybe we can get into that on another podcast.
mm,
I do like to consider topics such as that as well, as a human being that tries to understand multiple faculties of life here. Um, but yes, the bottom line is that I think by having as more people as possible not running on the hamster wheel, having enough resources to step off of that paradigm, to start building themselves up, to start growing their minds, growing their capacities, not only do individuals improve themselves, but the entire world becomes a cooler place to
mm.
be. So that is what really ultimately motivates me. Um, who am I? Who am I? Was that your question? I'm a divine being having a human experience right now.
Mm.
That's what I've arrived at here at this point in my life. Who are
I love
you, Ben?
I would say for me, I am someone that tries to just continue every day to show up by my values, and I think I've always done that. Like we had a conversation earlier, it's like I've always wanted to not be the good person or the best person or any of that garbage. It's like I want to be a good human by just being human, right? By knowing who I am, doing what I feel is right, speaking my truth. And when you're choosing your values, I find it ends up being so clear to yourself to know when it's like a hell yes and a hell no throughout every asset of your life, of all your wellness dimensions. And I really, really believe that by always staying true to my values, I will continue to show up as human as I can and encourage more and more and more people, whether it's my friends, my family, my communities, to do the same. I'm a huge believer on like the ripple effect. And so I know it takes a lot of inner work to know thyself
Mhm.
to be able to then, share that with others to hopefully have that ripple effect on them. And then they share with others as well.
That's what it's all about, right? And then we make this world for the brief flash that we're here, we just make it a better place. And what does that mean ultimately? Big picture, maybe we don't have the answer to that while we're here. Maybe we can't. But at least it becomes a better and a more fun place to be while we're here if we all do that.
I totally agree. I just want to say, just coming off of this chat, it's been so nice because I feel a lot of it has been really, really time and space. I really wanted you to kind of lead the way and follow your lead. But just before we sign off, I love that you spoke about the positivity in humanity. I feel like when a lot of people are following, the financial news, they could sometimes feel overwhelmed. So before we sign off today, Chris, like if this was your last podcast interview to share, that positive light rather than darkness to anyone that's tuning in and listening, what would you want to share with them?
Hmm. Uh, it's this. Mm, Nothing exists for no reason. We are here right now. Um, and there is something happening. We can see that just in the very short run. We can see, I mean, I move this plant from one side of the desk to the other side.
Mm.
So uh, that has changed, and therefore the total sum of creation has changed just in that one action, that one moment. So that implies that the total sum of creation uh, was not done yet. It was not done with what it wanted to do, with its ultimate expression. Let's just say that. And so something is happening here. We are here for a reason, and it does seem like there is still something to do. I don't have the ultimate answer, maybe not in this life, as to what that is. But there is something to do here. And so to me that is inspiring. That is I think inspiring on a grand scale.
I love that. Well, I want to just take this last little bit of time, to thank you for always, speaking your truth, for always being open to conversations like this. And most importantly, from how I met you in person to where I see you online, staying true to just being yourself, which I want to see more and more people do. So thanks again for being here today. And I look forward to seeing you soon in Montreal. You'll have to come visit soon.
We're there. We'll talk business and everything else as well.
Awesome. Take care,
Thank you,
brother.
Ben. Thank you so much for having me.
Cheers.